This week on the VC React podcast, Saudi is about to lift the cap on foreign ownership of public companies. Does this invite long-term institutions or fast-moving hedge funds? In private markets, Tadawul and STD are teaming up to launch a private trading platform for startup shares. But can true private stock exchange work in Saudi when most attempts globally have failed? Over in Abu Dhabi, Presight and Shuru just launched a $100 million AI global fund. Local capital is going global, chasing innovation anywhere, not just local. Is that smart or risky? Debt is having a moment. Irad gets a $33 million debt facility from Stride Ventures. Why is MENA suddenly becoming the hottest place for private debt? And finally, open banking hype turns into reality. Saudi Fintech Spare just raised $5 million, powering players like Tap, Tamara, and Zed. Is this the Stripe of open banking, or a utility company everyone will have to plug into? Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, funds, and investment rounds. Let's jump into it with our guest for today, Akmal Al-Haq, angel investor and CFO of Pearl Semiconductor, and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guest, his LinkedIn profile, and link to his company website. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space.
This episode is brought to you by OCTA, the AI-powered finance automation platform built for modern businesses. Managing receivables is not one task. It's dozens of repetitive ones. Correcting invoice details, updating PO numbers, following up on payment status. It's operationally critical, but painfully manual.
OCTA changes that. It helps you automate your financial operations, starting with accounts receivable, so you can focus on what you're actually good at, growing your business. From contract to cash, OCTA's AI agents handle everything: invoice creation, reminders, dispute resolution, payment tracking, reconciliation, even financing. You don't need to learn how to use OCTA. OCTA learns how you work. It adapts to your SOPs and existing workflows to get the job done. Finance teams at Careem, Lean Technologies, and Outgram rely on OCTA to reduce admin time, speed up collections, and unlock cash flow.
If you've heard of them before, you know that they used to say 100 companies use OCTA. The number is now 500. They are moving fast. And that kind of growth only happens because the problem is real and the solution actually works. Automate the finance work that slows you down. See how at weareocta.com.
Hi, Jamie. How's it going this week after Money 2020? That was an experience.
It was an experience. I'm still tired. Unfortunately, I don't think I've had the opportunity to adequately catch up on any sort of rest yet. And look, I think the breadth of topics which we're discussing this week is sort of testament to that in one level, and kind of complements, I think, the conversations or maybe some of the buzzwords that frequently were kind of cropping up, I think, last week. I think one of those was maturity. And I think certainly, I think this development as far as the cap on foreign ownership is concerned, and also the secondaries development, which I'm sure you'll be keen to chat about shortly, is further evidence of that. So, look, I'm feeling energized after it, but I am looking forward to hopefully this Saturday having the opportunity to sleep more than 8 hours. That'll be nice. What about you? How are you faring?
Well, it was an experience. I
Yeah.
loved having us, doing a live podcast. It felt different, honestly, when we're live with the guests in the same room. And I'm still in Saudi, by the way, still working on some meetings here. Let's move on to what's happening this week.
Yeah, look, I look forward to owning 50% of a publicly listed company in time. And thankfully, the news or the development this morning makes that a very unlikely possibility in my case, but at the very least, a possibility. And that's the news that Saudi, the Capital Market Authority, more specifically, is finalizing changes that will lift the current 49% cap that is in place on foreign ownership. they're nearly there. It seems it could come into effect before the end of the year. There isn't sort of definitive clarity on necessarily whether that will be the case or not, but certainly it's something that I think we can expect coming down the line pretty imminently. The timing is interesting. I think Saudi stocks generally have had a tough year, I think, relative to maybe, other emerging markets, stock indices as well. I think the main index on the Tadawul is down about 9.6%. So it's the worst performer in entire Gulf context. But interestingly, there's some interesting things that I picked up on. Despite all of this in August, 35% of all stock purchases on the exchange were via foreign investors. So it's not as if they're running away. And if anything, one would like to think that this will only precipitate something of an increase. One of the companies that was name checked specifically in the piece I was reading was Razan, who I think we covered way back
Yeah.
when they initially IPO'd about 50 episodes ago, I think that was. So it's interesting, and there's a massive surge yesterday on this news as well. I don't know if you saw that, Ahmed. It was a pretty
5% in one day.
big pop.
5% up in one day. Yeah, yeah, yeah. We were talking about this here in the office. What's happening? And then we read the news that with this new update in the market. But as you mentioned, the Saudi stock market has been going down for the past, I don't know, 9 months since the beginning of the year. It went down more than 10, maybe 15%. But overnight, 5% up. Ahmed, what do you think? Do you think this move will attract more institutional investors to invest in the Saudi stock market, or do you think this will bring in those fast-moving hedge funds that are looking for emerging market arbitrage?
But before replying to your question, I would like to say two things. First, I'm very happy to be with you on this. It's nice. Although you raised my expectation, I was thinking you are coming to Cairo to do it face to face one.
Inshallah, next time. Next time.
Okay. Secondly, honored to be maybe your first time to have one guest only. So we'll try. I hope it will be a good episode. So I am feeling the pressure of making it a nice one, or you say,
No
okay, I
pressure
will
at all.
cancel this, trial and return back to what I do. So you are putting big pressure on me. So to reply to your question, it's amazing to see what's happening. I'm happy that we are doing this after this announcement because I'm working in this field since a very long time. We started in Egypt. We had a very good stock exchange. And then after the revolution, everything stopped. Firstly, also, it was Egyptian only and then foreign. And now Egypt stock exchange is a great stock exchange when you speak about foreign direct investments and foreigners and so on. So I'm happy that Saudi is taking the same pace and it's doing it faster maybe. They are very quick doing the reform. Of course, when something like this is announced, you should expect a 5%. And the 5%, I believe, because it's capped, it can go up because now you are open to the whole world. Anyone can go and buy a stock. We know very good companies in Saudi, very stable companies that are since inception. We are not speaking about the new companies even, but they have very strong corporate backed by the petroleum industry and the oil and gas and. So,
Aramco and SABIC
yeah,
and all
sure,
the
sure,
banks and the
sure.
telecoms.
Aramco,
Yeah.
who would not want to invest in Aramco, buying maybe 10 shares for his grandchildren? At least, you don't want to sell even, don't want to trade. Just have them in your pocket somewhere, but remember where you'll put them. This is the idea.
Like a safety net. Yeah.
Yeah. So, yeah, this will help the market a lot. This will have lots of foreign direct investment. This will help the region because whenever you have strong one stock exchange is better, two is better, three. This region is transforming, but you would find some Saudis seeing this as our companies will go to foreigners. When we were doing acquisitions, we were not able to go and do acquisitions in Saudi because of the regulation and the minority, and we weren't being a majority, and you can't have a majority So now, I believe in free market all my life, and the market rectify itself.
Yeah, but there's something in the market that's happening, and we're not sure what's really the cause of that. So foreigners, as Jamie mentioned, make up 35% of the trading, but the volumes in general are shrinking in the Saudi market, and it was going down for a while. Is this a signal of a weaker local participation, maybe, in the market? What do you think is really happening in the Saudi market this year?
I believe what's happening in the region is making people have fear for the region. Lots of people are speaking about, let's go back for gold. Gold is the safety net now. We don't know what will happen. We are in a very tough situation worldwide. It's not only our region. Europe and Russia thing is, in the other side also, it's not stable. So I believe people are afraid from stocks. Whenever we are in a situation like this, people go to fundamentals, and fundamentals was always gold. Even now, you can see that real estate is not well in our region because people are afraid, because real estate was another safety net. Now, people thinks what will happen? Is real estate easy to liquidate if something, God forbid, not good happen? So I believe the reason would be the political situation, maybe. So tell me, Ahmad, how many times we said this is the first time gold reached this? I
It's
believe we
always
said that
going to new highs.
last week was maybe the sixth time, the seventh time we say we never have seen gold this way.
Yeah, we're still in Saudi, but now we're moving to the private market in Saudi that's somehow creeping into the public market. What's happening, Jamie?
Yeah, you're right. It's sort of straddling the fine line between both. And as I mentioned, I'm sure you'll have thoughts, but I don't want to spend too long on sort of setting the context. But essentially, the tech arm of the Tadwell Group, they have partnered up with STV, who I think we're all aware of in a sort of VC context. And they are going to be attempting to develop an electronic trading platform to enable buying and selling of shares in private companies in Saudi, which perhaps is easier said than done. Which would you agree with that, Akmal, that contention?
Well, honestly, I don't know. I'm not very optimistic about that because I've seen so many experiments in the US and elsewhere for people trying to create a private stock market for private companies and startups. And almost all failed or pivoted to a different model. We've seen Sandhill Markets, Takatkah, Forge Global, Nasdaq Private Markets. All of them kind of pivoted to the tender offer model or the structured liquidity windows. The main problem I saw in those experiments was basically one, founders hated that their stock is being freely traded on a market so that the price is controlled by the supply and demand of the traders. And second thing, they cannot control their captain. So that's why I think this concept fundamentally doesn't work. But let's see what Akmal has to say about it. Akmal, you've been in private equity for a very long time. You've been in mergers and acquisitions. What do you think a private stock market would add to the region? And do you think it will work or not?
I worked in, as you said, in private equity. It was all a merger and acquisition. It was always a problem trying to buy a private company, actually, and you found their founders or their owners, whatever, if even if they're not founders, problems with valuation. It's not easy. And the problem is also how the regulation will go, because buying shares in a private company, we have lots of issues with minority rights in this region.
Mm.
So it will not fly unless we are able to do something with the minority rights. Put yourself or me, would we go and buy 10% of Akmal Haq? For example, I do a consultancy firm. I established it, this hypothetical, and I own it. I will trade 20% of it. Actually, I'm controlling everything. You are buying just some paper. I can take this company somewhere and I can take it to the bin
Well,
public.
even if you're in full control, you still own 80% of the company, but the
Yes.
price of your share is being decided by the market, right?
Yes. The price is decided by the market, which I will not like at one part.
Mm.
And also, private companies is a very big spectrum. There is private companies which worth billions, and there's companies that does not worth anything. So what is the methodology? You have in Egypt what they call Nile stock. Do anybody buy stocks in Nile stock? No one buy because of this. At the end it become, what to say, an easy trading methodology for owners and the people who know the owners. So it's not publicly as the 100 million Egyptians can go and buy. They are afraid to
Yeah.
do so. You don't have, what one of the main drivers in IPOs, usually, you need to people to know your company to be able to trade in. Usually the IPOs that are very famous is the B2C company, or you are working for 3 years on doing, publicity, doing marketing, doing branding, making the market aware of your company. So it's not an easy thing, but let's hope it works this time.
Yeah, hopefully it will work. And I see the point where B2C companies would be more successful in IPOs than B2B because of, the advertising. Retail investors would have used that product themselves as customers. But still, B2B companies would make successful IPOs, as you mentioned, if they work on public relations and,
Yes, to
in general,
your
PR and
coming
media.
podcast before doing the IPO is very important.
Oh, wow. Okay. I love
I, fu-
that.
I fully agree.
It's
I fully
famous
agree.
now.
Yeah, absolutely.
So, Akmal, I know that STD and Tadawul, they're trying to solve a problem in the market, which is liquidity for private companies and for VCs, angel investors, and even private equity investors or growth stage investors. If not by building a private stock market, how can we provide liquidity in the market? Is there any other ways?
I believe one of the main important thing for adding liquidity in the market is changing the regulation. We need to safeguard the investors, whatever they are, small investors, big investors, angel investors, VCs, private equity. I know lots of angels investors who had suffered because at the end the founders took it somewhere else or done something. Of course, having a platform and having things that regulate the easy transfer of money is very important. Mechanism for secondary sometimes is important because the exit sometimes is tough, and the exit without the minority rights is not a very good thing. Even in big companies, Ahmed, I was on the other side. So sometimes while we are working in private equity, you come and buy 70% or 80%. People think that the company will go with you better, so they don't sell. And then when you are doing the second round, usually you can put a lower price while the company is, valued more because now you are controlling everything. I
Mm.
had sometimes while working in private equity, even I had some people coming me with small minority, which was 3% or 5%. Would we go in this or wait with the company? The company will, because sometimes they are employees, and they think they know that the company will go bigger. I told them yes, but the company will bigger, but we are getting it private, so you will only have to sell to us later on. So it's a
Mm.
different game. I
So maybe
believe.
the regulations should protect shareholders from you guys, from the
Yes,
private equity.
exactly. Sometimes, yeah, yeah, yeah. It depends in which seat you are sitting.
So let's move on to the next story. Jamie, there's a new fund.
Yes, a new AI fund, would you believe? I put this By my count, I think it's the third regional fund sort of dedicated
Yes.
to AI that we've had over the course of, I was going to say the last year, but I think the first was only announced in May. Obviously, we had two quick succession. We had Wild VC, 50 million, and then STV with the backing from Google. Yeah, we have another to coincide with. I think Presight have been doing like an AI week, and this was maybe the centerpiece of this is that they're partnering up with Sharuk, launching a 100 million fund, and as you noted in the introduction, Ahmed, importantly, a global fund, which is sort of an interesting thing to note in and of itself. In terms of the press release, you've sort of the usual culprits as far as the focus is concerned. It all sounds fantastic. Yeah, you've your smart cities, energy, AI, machine learning, augmented reality, virtual reality, Industry 4.0, and deep tech. So, do with that what you will. And I suppose maybe one of the value add components cited as well is the fact that aside from just exclusively the venture backing, they obviously gain access to Presight's technical infra as well. So cloud compute, GPU resources, and obviously tap into Sharuk's network, which is extensive as well. So I don't know. What do we think of this teaming up? As you mentioned, Presight launched, I think, an AI accelerator program relatively recently as well. So I suppose it's building on that also.
Yeah, and Jamie, correct me if I'm wrong. The first two funds are targeting local companies or regional companies in Saudi and in the MENA region, correct? So Wild VC and STV fund are targeting Saudi companies,
I
right?
think Wild VC, I think, is sort of bridging the Gulf and the US as far as I know. So
Okay.
one of their first investments was Perplexity, for example. So the second one would be Applied AI. It was formerly based in the UK but relocated to Abu Dhabi a couple of years back. But I think STV, I think it's, I'm up to correction on this. I think it's exclusively regional focused. Like they backed the AI Arabic company a while back, and Clarity last week as well, who they
Yes.
backed. So I think they have a more specific mandate from what I can gather.
And this one is more global. They're saying that this is a global fund. Right?
Mm.
So two things here to discuss, I think. One, this is my own thesis in the market. There's so much capital in the MENA region, especially in Saudi and the UAE. And that capital is chasing too few deals, especially in AI or deep tech. I think the future of this is basically, or in the next, I don't know, 3 to 5 years, the majority of the VC funds in here will start opening up to invest in a global deal flow, not necessarily just in the region, because of the abundance of capital in here. So that's one thing. The second thing I want to discuss is basically how a corporation outsourced the fund management to a VC firm instead of creating its own CVC or corporate venture capital arm. So Akmal,
I
local capital going global. What do you think?
I was saying in Ramadan there is two important words now in the world, which is AI and pistachio. I don't know.
Yes.
Yeah,
Pistachio. Why?
yeah.
What pistachios?
Because everyone who do sweets was adding pistachio in it. It was a hype.
Okay.
So, and you had the Dubai chocolate, and so you have to be
Oh, okay. Yeah,
either,
yeah, yeah.
yeah, either doing AI as a corporation or doing something with pistachio if you will not work with corporations. So AI is very important. We are seeing how it's going. The funds are trying to go outside the region because actually we don't have lots of startups where you can invest in deep tech and AI. When you say the hen or the egg, who is first? I believe one of the reason why we don't have deep tech startups in this region is that that the VCs and the funds were not interested, or not, let's say, not interested. They were afraid to invest because this is a longer term investment. It's riskier. Fintech, you know how it will go. Putting a fin or putting a tech, it was very easy. You know how you will do. Putting some digitalization or automation, so taking a service online or doing a service through a platform. was very easy. You know how you would do your multipliers. Doing a marketplace, I know the multiplier. You will have so many users, how many repeated users, how many orders. We know how to do the multiplier. With deep tech and AI, it's something m- most of us in finance we don't understand. So we don't know. We have to rely on others. We don't know our as a model. It's a technology. Maybe this technology will not work. So oops, I will not have any multiplier. I will lose my money. So all funds were reluctant to invest. This made people even go outside. So you would find lots of the AI companies, startups now, they are originally from this region, but he went to the States, either because he studied in one of the United States universities or whatever, or because he thought he can be incubated better there. So,
Yeah. We've seen examples from Egypt, from Jordan, Replit,
yes, yes,
of companies, yes, in the region and then migrated to the US.
yeah.
Hopefully, we can see more companies maybe staying here because this capital will be invested in deep tech, whether it's local or global. So hopefully, we'll see more companies staying here.
Yes, I'm
Sure.
very happy to see this. I want the VCs, the funds, to invest in deep tech in this region because we have very good engineers. We have very good ideas, but we don't have the investment, what to say, readiness from the funds and VCs and
Mm.
angel investors. You would find, by the way, angel investors investing more in this field than the big firms because they believe in the idea or they understand it. It's very easy to have funds for deep tech from Far East than to have it from the region, even if the company is in the region,
Why do you think that?
because they understand the technology. They saw uh, where was
Mm.
Huawei started and where is Huawei now? Where is Xiaomi now? BYD. You had Elon Musk was saying that BYD will never beat Tesla. Now BYD is the biggest manufacturer of electrical car in the world. So they see the
Oh.
technology, they understand the technology, they need the technology also because they know the market. So if you are working in AI or deep tech and you work on chips, for example, and semiconductor, they know that there is a demand. They see the clients. Here you would be telling them, yeah, it will be used in the automotive. How it will be used in the automotive? Why the chip would be in the automotive? People don't understand the technology. You need to teach the investors your technology. So to pitch
There's a lot of education
to pitch
you need. Yeah.
a fintech company. It's you go about the idea and then you speak about the numbers. To pitch a deep tech or an AI company, 75% of the pitching would be about the technology and how it will be used in the future,
Mm.
before speaking about numbers.
On the second point, how a big corporation like Insight, a public company in the UAE, decided not to start its own corporate venture arm, but outsource that to a VC firm, one of the top in the UAE. Shurur. Why do you think they did that? Why not start their own CVC like the majority of these big companies?
Maybe they want, to hit quickly with success. We don't know if they will do a parallel team inside to learn and understand. Is it a
Mm.
3-year term or it's a long-term relationship? So sometimes, depending on your targets, you don't have time to build your team. It was
Just to save
always since
time and get to
business.
market faster.
Yeah,
Yeah.
yeah.
Okay, let's move on to Irad. Jamie?
Yeah, let's talk about talk about two of our favorite things, or two of our favorite themes over the course of the last pretty much since the podcast inception, which is SME lending and financing and venture debt. I get to talk about them in the same breath, which is exciting. So Stride Ventures, originally from India, but have been really fleshing out their presence in the region. They have an office in Abu Dhabi, they have an office in Riyadh now as well. So they're on the ground in both locales. I think they've committed, I think I was reading a separate article this morning, I think $200 million to Saudi specifically over the course of the next number of years from a debt financing perspective. And yeah, they've backed Erad to the tune of $33 million, which was announced at Money 2020, I believe. In terms of what maybe Erad do as well, it's Sharia compliance, it's data-driven financing solutions for SMEs. It's a GCC, so I think it can be improved in as little as 48 hours, as processed in excess of 50 million to date. But look, I think we're all aware of the size of the credit gap from an SME perspective, both in Saudi, the UAE, and more broadly. But yeah, I mean, I think both of these teams were, I don't know, they were certainly up there, Ahmed. I don't know your perspective on it in terms of conversations at Money 2020. It was private credit and SME financing. I think those were definitely the top three.
Yeah, I think many companies are proving that they figured out that equation, right?
Mm.
If I have money, I can lend it to SMEs and make good interest, take a cut, and give the money back to the lender. We've seen that with Tamara, with Hala, with Lindo, and now with Irad. And I'm sure many others are coming. The question is why all of these, all of a sudden, are attracting international capital, international debt. Akmal, international debt have not been looking at this region as a sexy region or a hot region to invest in. But now, all of a sudden, this year only, all of these big names are investing in these companies. What do you think is happening?
I believe the region have proved since quite a while that it's a very good, profitable region. People were not seeing it, but they discovered that the local players have done significantly very good returns on this region. Also, the region is better regulated now than maybe 3 years ago or 4 years ago. We were able to show cases that are very successful. The social media has also an effect, and what you do, guys, and what others do, and all the people who put news on Facebook, sometimes Instagram, LinkedIn, you now can see some news every day on Instagram from people in this market. So you can be happy with something like this because you are part of this transformation, not us.
I would
We are
love to take
working
credit.
we are working,
I mean,
trying,
part,
we are
yeah, part
so
of having this podcast, I always say that part of having this podcast in English is to communicate what's happening in the MENA region
yes,
to
because
the world.
because by
That's
the
why
way,
we have it in
we
English
can
too. Yeah.
we can do it in Arabic, and we are not doing in English because of Jamie, but we are doing. But you are who you are speaking to. You know, we were always in the past speaking to ourselves and thinking that we
Mhm.
are the best and we don't need to go outside because we know what we are doing. I believe we started even as government. You would find that I was attending, for example, one of the big event in Egypt, and it has from the prime minister to all the minister were coming, some investors coming from abroad and doing their presentation in English and speaking about what's the opportunities in Egypt. This is something new because usually, even if we are doing so, we are doing it with the mentality of we are speaking to ourselves. We are the best. You are not trying to sell your country because at the end, by the way, prime ministers, ministers in each country, they are doing what we are do for our corporate because you are trying to market, brand your country for investment. to bring foreign direct investment. You are trying to make sure that they know, for example, Iran, that when they come and invest and lend, they are able, there is the regulation that will safeguard them. So you are doing something, the governments are doing something, the corporation and we on the other side are doing something because we are trying to make the companies profitable.
With that, let's move to the last story for today. We're still in fintech with open banking. Spare has raised a big round. Jamie?
Yeah, that probably completes the trifecta, which I earlier alluded to in terms of private credit, SME financing, and open banking probably rounds that out pretty comprehensively. I would suggest, look, open banking has it's been increasingly popular. It's been a buzz that's been thrown around, whether it be open banking or open financing. Spare, as you mentioned, they've raised 5 million in a pre-series A. The Arab National Bank, their seed fund, 500 MENA, Vision Venture, Cedra, MEVP, founded back in 2019. So it's been around quite a while. In fairness, for those unfamiliar with open banking, essentially provides APIs for like account data access. You can do like account-to-account payments, identity verification, risk scoring, recurring payments, all that kind of thing. If you can make it work, it's a fantastic business. I suppose Plaid is kind of the best in class in terms of in a global context in the US. And they had to contend with a much more, I suppose, grey regulatory environment whilst they were screen scraping. And thankfully, regionally, we've quite a collaborative, I think, regulatory sort of framework, whether that be in the UAE or whether it be in Saudi as well. It's a competitive space too. Like obviously you've Lean Technologies who've raised, I think it's in excess of 100 million at this point, and their Series B was led by General Catalyst, Tarabush as well, originally from Bahrain, who've raised a significant chunk of capital as well. But looking at the client and customer list of Spare, it's clear that there's a very sizable appetite from companies, startup institutions for this particular solution. I suppose maybe the question on one level is, how much room is there for I suppose these platforms? How many open banking platforms can we have regionally?
I believe there is a very big room. This is very new for this region. We are just, going from traditional banking to new things. We are just, starting this. So you would have lots of people coming. The early adopters have a great impact on how it will go. I hope they will have a great impact because we need this. This is where the world is going. It's the future.
The question for me is, hey, if this API connections with banks becomes commoditized, like we have 3 companies today, but I'm sure we will have more in the future. How do you get the customers and make them stick to your own platform? Like you're a utility provider, like you're providing the infrastructure. What else can you add on top of that to keep the customers with you? And I think Spare is trying to do that. In addition to open banking APIs, they have account to account payment, they have identity verification, risk scoring, recurring payments. So these are the things that would make Spare not just a utility company, but also a value add company. I don't know if Tarabut and Lean are doing these services. Are they, Jamie?
Yeah, so the Lean definitely very well. So I interviewed Mehdi from Lean, one of the co-founders, maybe 2 weeks ago, and he had a really interesting framing for it as well. This is sort of one of my questions on the business model and sort of how that's developed. And he kind of framed it, if you're familiar with Maslow's sort of hierarchy of needs. So Lean sort of has a merchant hierarchy of needs. So at the bottom, you have like reliable connectivity. Above that, then you've data enrichment, complementary products, and then network effects, which I think is a really interesting way of looking at things. And certainly from Johnny to Mehdi, it's the sort of the layering of products, sort of ancillary products that merchants or companies may need once they're already in the system that really contributes to that stickiness. So it's not that you're not just addressing maybe one pain point that they have, you're addressing a multitude of pain points, and you sort of become, fundamental to what that particular customer, you're addressing so many of their needs that the
We cannot
process of
leave
sort
you.
of the process, look, I mean, I sort of put that to him, and not quite that, but the process of decoupling is becomes more arduous, shall we say. And if they're doing a good
And
job
more
in the first
expensive to
place,
switch.
for sure, exactly. I think it's the switching cost factors in at that point as well. But look, if you're doing a good job in the first place, you never want to leave. So that's maybe that would maybe be the argument for that.
So,
But yeah,
Jamie, maybe a question for you. What do you think the end game will be for these companies? Like, would they be acquired by a bank, or that wouldn't work because they're working with so many banks?
no, I don't think so. I don't see that. I mean, I think at the moment, given the degree to which they've been so successful in a quite a limited market, and the extent to which there's been sort of like a literacy component in terms of, because I think there's been, education has been required on one level in terms of what open banking is, how it functions, how it works, the benefits of it. That they're really only reaching the point now where it's really starting to take off at scale. So yeah, I mean, I don't see a bank necessarily acquiring them. I think they can reach a suitable scale. I think although Plaid is still private, although Visa tried obviously to acquire
Oh
them,
yeah.
and that went pear-shaped. But I think there's ample opportunity.
Would bank buy them or not will depend on how they will evolve. Because, for example, if you look at consumer financing platforms all started as fintech companies, and they were doing consumer finance through apps and now you are seeing that big banks are buying this consumer financing companies because they saw it. Banks in the beginning, they were doing traditional consumer finance through loans, through something like this. Now they see this market and they are acquiring the consumer finance platform. You'd find that each bank now has majority share in one of the consumer finance platforms. So if the companies are becoming more of, doing financial activities, banks will be interested in this, and the idea here would be how they will make me go to them first whenever I think of a payment or whenever I think of a service. This will be the challenge because everyone will having his own methodology or platform or app or whatever, how they make it, or online website. So when I have something in my mind, which one I will tap first? This is the game.
Well, before we wrap up, a big thanks to OCTA for sponsoring today's episode.
If you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
With that, thank you so much, Akmal, for joining us today. And thank you for being the only guest for the first time on an episode of the VC React podcast. It's
Yeah, the
such a
pleasure
lovely
is mine,
experience.
and I believe now you would always say Akmal was my first one guest on this. I had a
Of
record.
course.
Yeah.